Banks in the United Kingdom have passed their stress test. For a look at what that means for investors, I'm joined by David Battersby, investment manager at Redmayne-Bentley. David, it's nice to see you. What are your impressions of the results?
Very good. This has been received well by analysts because what it really does show is that the regulator is saying that the banks don't have to put any more money aside, and therefore they can start lending to a greater degree than they have been up until now, even if there is a major correction to world markets, both economically, taking into account various considerations.
So how are the markets interpreting these results?
Well, very positively, because what this stress test has done to the end of December 2014, they said, right, banks, you've got to have X amount of money, set aside in case anything goes wrong, and we know what those figures are currently. But what if things got really worse? So let's say oil price went down to $38. Let's say that deflation occurred in the Eurozone. What about interest rates going up in the United States? How would this affect the businesses of the banks, and could they still survive? And the short answer is they all succeeded. There were a couple of banks who were slightly short of where they perhaps should be, namely Standard Chartered, but they were both considered to be done enough to move forward without having to put any, more money in the pot, as it were.
David, what's the outlook then for investors in terms of putting their money in financial or banking stocks based on these stress tests?
I think it's suddenly got a lot better because one thing that investors have been concerned of is that the misdemeanors of the past for the banking groups has meant that they've had to put money aside for fines, and this was one thing that they actually put in the stress test. Let's assume that suddenly they have a lot of money that they have to pay in fines, and can they carry on their business of lending, which is where they make money, if these things come to pass? And the regulator said yes, they can, which effectively gives the green light for giving better clarity of earnings going forward, and as a result of which the banks across the board have risen marginally this morning.
At this point, is the financial sector undervalued, would you say?
In my opinion, it is undervalued. A fairly blunt statement, perhaps, but taking into account, you look at the banks and the dividends that they pay, HSBC, which is a global bank with a lot in the Far East, and big concerns there about how it would cope with an emerging market problem, but it's certainly considered to maintain that dividend. Lloyds Banking Group, they're still just in government ownership, but that's due to come out fairly soon, and their dividend payments are due to ramp up. So with the earnings clarity that this provides, I think income for shareholders should flow through.
David Battersby, Redmayne-Bentley, thanks so much. Appreciate it.
Thank you very much. Cheers.
I'm Rhonda Schaffler for The Street.